For thousands of years, one asset has been one of humanity's most enduring stores of value. It has outlasted empires, survived wars, and, for many, it represents trust in money itself. For much of the last 500 years, its position as a primary safe haven asset has been nearly unparalleled. It is, of course, gold. Entire empires have been built on it. It has been a go-to haven in almost every crisis imaginable. But in 2025, the story is getting complicated. As the old king, gold, faces a new world, a digital challenger isn't just surviving, it's vying for the throne. The story of money is a story of evolution, and we are living through its most dramatic chapter yet. To understand the scale of what's happening today, you first have to appreciate the sheer, unshakable power gold has held for centuries. This isn't just about shiny metal. It's about an idea that's thousands of years old. The idea that money should be something real, something you can hold, something that can't just be wished into existence by a king or a government. For centuries, money was chaos. Anything from salt to seashells was used, but these all had fatal flaws. They weren't durable, they weren't easy to divide, and their supply could explode, destroying their value almost overnight. Then came the metals, and gold was the best of them. It had a unique combination of qualities that made it a near-perfect foundation for an economy. It's scarce, but not impossibly so. It's incredibly durable, so it won't rust or decay. It's easily divisible into coins and bars. And it's instantly recognizable and valued across cultures. These weren't just features. They were the pillars upon which a global monetary order was built. The classical gold standard, which existed from the 1870s to the start of World War I, was the peak of this empire. Currencies were convertible into a specific weight of gold, creating a relatively stable and predictable international system that helped fuel a massive expansion of global trade. If you held a British pound or a US dollar, you didn't just hold paper. You held a claim on a real, physical amount of gold sitting in a vault. This link was a promise. It acted as a constraint on governments, making it harder for them to print money recklessly. But the pressures of the 20th century were too much. The immense costs of 2 world wars and the Great Depression forced countries to break those golden chains. They needed to create money to fund their survival and jolt their economies, the very thing the gold standard was meant to limit. After World War II, a new system was born at Bretton Woods. The world didn't go back to a pure gold standard, but to a gold exchange standard. The US dollar was crowned the world's reserve currency, and it alone was pegged to gold at $35 an ounce. Other countries then pegged their own currencies to the dollar. Gold's empire was no longer direct. It now ruled through a proxy, the US dollar. But this system had a ticking clock. The United States, funding the Vietnam War and expanding social programs, began printing far more dollars than it had gold to back them up. Other countries, especially France, got nervous. They saw the writing on the wall and started demanding their gold back, trading paper dollars for physical bullion. The US gold reserves plunged. The empire was facing a run on its treasury. Then came the moment that changed modern finance. On August 15th, 1971, President Richard Nixon went on television and made a stunning announcement. He declared that the United States would temporarily suspend the convertibility of the dollar into gold. That temporary suspension became permanent. The gold window was slammed shut, and with it, the final official link between money and gold was severed. This event, the Nixon shock, marked the end of gold's formal role in the monetary system. For the first time, the entire global system was on a fiat currency standard, money backed by nothing but government decree and public trust. Gold was no longer the king of money, but it transformed into something else, the ultimate hedge, the ultimate safe haven. When trust in governments and their currencies wavered, people fled to gold. It became the insurance policy against the very system that had cast it out. Inflation, debt, geopolitical chaos, these were the forces that fueled gold's new, unofficial empire. For 50 years, that made gold indispensable. But the seeds of a new challenge were being sown, born from the very same system gold was meant to protect against. The 2008 financial crisis was a brutal "I told you so" for everyone who feared the modern financial system. The global economy, built on a foundation of debt and complex derivatives, came to the brink of total collapse. Banks deemed too big to fail were bailed out with trillions of dollars created from thin air. It was the ultimate example of the moral hazard at the heart of the fiat system. In the middle of this chaos, on October 31st, 2008. A mysterious creator named Satoshi Nakamoto published a 9-page white paper to a small cryptography mailing list. The title was simple: Bitcoin, a peer-to-peer electronic cash system. It proposed a radical new idea, a form of money that was completely decentralized. No central bank, no CEO, no government in control. Its rules were written in code and enforced by a global network of computers. It was a direct response to the failures of traditional finance. In the code of the very first Bitcoin block ever created, a message was embedded: the times 03 Jan/2009 Chancellor on brink of second bailout for banks. It was a mission statement. This wasn't just a new technology, it was a protest. For years, Bitcoin was a niche hobby for cryptographers and cypherpunks. But slowly, people began to see that its properties made it more than just a digital payment system. They made it a potential competitor to gold. The analogy became unavoidable. Bitcoin was digital gold. Gold versus Bitcoin. First, scarcity. Gold is scarce because of physics and economics. We can, in theory, always find more by mining deeper or even on asteroids if the price is right. Bitcoin's scarcity is different. It's absolute and mathematically enforced. There will only ever be 21 million Bitcoin. That number is written in the code and is incredibly difficult to change, requiring a massive consensus from the entire network. Gold is scarce. Bitcoin is finite. Second, durability. Gold is physically durable. A gold coin can sit at the bottom of the ocean for 1,000 years. Bitcoin is digitally durable. It exists as a shared record on thousands of computers worldwide. As long as the network of computers is running, Bitcoin exists. While individual access can be lost, the network itself is incredibly resilient. Third, divisibility. You can shave gold into smaller pieces, but it gets impractical. Bitcoin is effortlessly divisible down to 100 millionth of a single coin. These tiny units are called satoshis. You can send $1 billion worth, or a fraction of a cent's worth, with the same core technology. Fourth, portability. Here, the difference is night and day. Moving a large amount of gold is a logistical nightmare of armored trucks, guards, and vaults. Moving $1 billion of Bitcoin requires only a private key, a string of letters and numbers. You can store it on a flash drive, write it on paper, or even memorize it. You could cross any border with a fortune in your head. And finally, verifiability. To be certain that a gold bar is real and pure requires a specialized physical assay. To verify a Bitcoin transaction, the network does it for you automatically and cryptographically. Every transaction is on a public ledger called the blockchain, which anyone can check. It's radically transparent. For years, this comparison was just a theory. Gold was the multi-trillion-dollar behemoth, trusted by central banks. Bitcoin was the volatile, speculative upstart. Gold had a 5,000-year history. Bitcoin had just a few years. But as we got deeper into the 2020s, the theory started to collide with reality. We're about to enter the most dramatic part of our story, where this theoretical challenge is being tested in the real world. If you're finding this analysis valuable and want to understand the tectonic shifts happening in our financial world, be sure to subscribe and hit that notification bell. You won't want to miss what comes next. For an empire to be challenged, it doesn't happen overnight. It happens slowly, then all at once. The period of 2024 and 2025 has become a fascinating stress test for both gold and its digital challenger. Throughout 2024, both assets had strong years. Gold saw gains of around 35%, while Bitcoin surged by over 135%. Both were seen as hedges against economic uncertainty and inflation. Gold was being bought heavily by central banks, while Bitcoin rallied on institutional adoption and the launch of new ETFs. By late 2025, gold was trading near a record $4,000 an ounce, with Bitcoin fluctuating around the $100,000 mark. But then, 2025 delivered a twist. The narratives began to diverge. While both assets had moments of strength, gold emerged as the year's top-performing major asset, climbing more than 55%. In contrast, Bitcoin's performance was roughly flat, or even slightly negative for the year, badly underperforming gold. The year that many thought would prove Bitcoin's supremacy as a safe haven instead reinforced gold's traditional role. This has ignited one of the biggest debates in finance. What is the true safe haven? The evidence shows a complex picture when you look at the flow of money in exchange-traded funds, or ETFs, the main way big investors get involved. While Bitcoin ETFs saw a flood of inflows for the year, a stunning divergence has appeared. Despite Bitcoin's lackluster price performance in 2025, its new spot ETFs have attracted massive amounts of capital, with BlackRock's IBIT fund in particular becoming a juggernaut. At the same time, gold ETFs have seen more mixed, or, in some periods, significant outflows. What does this mean? It's not a simple story of one asset winning and the other losing. It's a strategic rotation. The smart money, asset managers, hedge funds, and even some corporations is making a deliberate choice. While they are still holding gold as a proven crisis hedge, they are also allocating a portion of their portfolios to Bitcoin, viewing it as the high-growth asset of the future. This complex dynamic is driven by two powerful forces. First, institutional adoption has finally arrived for Bitcoin. For years, big players were kept on the sidelines by volatility and regulatory fears. But the launch of regulated ETFs in 2024 gave them a green light. Corporations like MicroStrategy have made Bitcoin their primary treasury reserve asset, holding billions of dollars worth. While this is still not a mainstream corporate strategy, it has normalized Bitcoin and turned it into a legitimate part of a diversified portfolio. Analysts now talk openly about a small allocation shift from gold to Bitcoin. Even a 5% rotation from gold's colossal market cap could theoretically double Bitcoin's value. Second, there's a powerful generational shift. For older generations, gold is tangible, familiar, and the undisputed store of value. For millennials and Gen Z, who grew up in a digital world, the idea of a digital store of value is second nature. They are often more comfortable with digital scarcity than physical scarcity. As wealth transfers from older to younger generations, there's a natural tailwind for digital assets. What we are witnessing in 2025 is not the fall of gold, but the undeniable rise of a legitimate competitor. It's the moment gold's narrative as the only reliable haven has been broken. The king now has a serious challenger to the throne. Of course, an asset with a 5,000-year history isn't going to just vanish. The debate between gold and Bitcoin is now a central question in finance, and the arguments on both sides are fierce. Defenders of gold argue that its legacy is its strength. It has proven its worth through every crisis imaginable. Its stability is its key feature. While Bitcoin's price can swing wildly, gold is the steady hand, the ballast in a stormy portfolio. Central banks still hold thousands of tons of it for precisely this reason, and their buying has remained robust. Gold has real-world use in jewelry and industry, giving it a tangible value floor that Bitcoin lacks. As 2025 showed, when true global uncertainty hits, gold's time-tested role as a risk-off asset shines. But proponents of Bitcoin argue the world is changing. Bitcoin's volatility, they say, is a feature, not a bug. It's the price you pay for explosive growth potential. And that volatility is steadily decreasing as the asset matures. They argue Bitcoin isn't just an asset, it's a superior technology. Gold is an analog store of value. Bitcoin is a programmable one. You can build financial services directly on it. It's the base layer of a new, open financial system. The 2025 landscape reflects this split personality. Both assets are in demand for different reasons. Gold is being driven by geopolitical fears and central bank de-dollarization. Bitcoin is being driven by institutional adoption and a generational search for a high-growth, digital store of value. The question is no longer if Bitcoin has a role, but how big that role will be. The story of money has always been one of technological succession. Barter was replaced by commodities. Commodities were replaced by precious metals. And for a very long time, gold has reigned at the top of that pyramid. The 1971 Nixon shock was an abdication. Gold was removed from its official monetary role but kept its cultural power as the ultimate store of value. What we're witnessing today is different. This isn't an abdication. This is a direct challenge to the throne. The flow of capital, the preference of a new generation of investors, and the arrival of a new technology all point to a profound historic shift. Gold's legacy is undeniable, but in a world that is becoming more digital and borderless, the argument for a digital, borderless store of value is becoming impossible to ignore. The 500-year reign isn't ending because gold has failed. The debate is whether it's ending because a challenger has emerged that may be better suited for the world that is coming. But now, the question is for you. Are we truly witnessing the final chapter of gold's storied empire? Or did 2025 prove that its millennia-long history is too resilient to be overthrown? Is Bitcoin destined to share the throne or even take it? Let us know your thoughts in the comments below. And if you want to continue exploring the future of our financial system, be sure to watch our next video, where we dive into the coming battle between decentralized cryptocurrencies and government-backed central bank digital currencies. Thank you for watching.